Central Bank Digital Currencies, or CBDCs, are steadily gaining attention in the financial world. As they evolve, the debate around their potential benefits and drawbacks intensifies. In this video, we'll dive deeper into the opportunities and threats posed by CBDCs, the reasons behind their appeal and fear, and their overall impact on the control and flow of money through the global economy. CBDCs are digital versions of a country's national currency, issued and controlled by its central bank. They are designed to work alongside traditional cash and coins, but with digital properties that make them easier to transfer, store, and use. CBDCs aim to blend the advantages of cryptocurrencies like Bitcoin with the stability and regulation provided by a central authority. Their introduction could revolutionize the way people transact and interact with money on a daily basis. Proponents of CBDCs say they can provide several benefits to society. CBDCs could increase the efficiency of cross-border transactions and reduce transaction costs, boosting trade and growth. They have the potential to streamline money transfers and faster, cheaper transactions between countries. CBDCs offer increased security, as they can employ cryptographic techniques to protect transactions from theft and fraud. Their digital nature also makes them more difficult to counterfeit, making them more secure and reliable. CBDCs can help bring financial services to the unbanked or underbanked by reducing barriers to entry, such as high fees or lack of access. With the increasing availability of smartphones and internet, CBDCs can offer a convenient way for people to access financial services. CBDCs can provide central banks with more effective tools for implementing monetary policy, offering greater control over the money supply and interest rates. Despite the potential benefits, there are concerns surrounding CBDCs. One of the biggest is CBDCs could enable unprecedented levels of government surveillance over financial transactions. Central banks could monitor and control individual spending habits, raising questions about the erosion of financial privacy and civil liberties. CBDCs could allow central banks to impose negative interest rates more effectively, penalizing savers and encouraging spending. It could also erode the value of money and create a culture of reckless spending, leading to long-term economic collapse. Governments could use CBDCs to enforce sanctions, freezing accounts, or denying access to financial services. This could lead to a new form of financial exclusion, where people are denied services based on their political views, for example. CBDCs could be vulnerable to cyber attacks, system failure, or other technological risks that may undermine trust in the currency. The adoption of CBDCs could have implications for the control and flow of money in the economy. Central banks could lose their ability to control money supply and maintain financial stability. This could lead to economic consequences if not managed with proper safeguards. The ease of transferring CBDCs across borders could lead to capital flight, causing financial instability. This could trigger more financial crises. CBDCs could disrupt the traditional banking system, as people might prefer to hold their money directly with central banks. This could undermine the role of banks, potentially stalling economic growth. Policymakers need to consider the consequences for the banking sector and develop strategies to support the function of banks. As CBDCs gain prominence, they could compete with cryptocurrencies like Bitcoin and Ethereum. This could lead to a shift in the balance of power in digital currencies and create new winners and losers. As with any new technology, CBDCs bring both opportunities and challenges. To mitigate the risks and capitalize on the benefits, central banks must carefully design and implement CBDCs with a focus on transparency, privacy, and financial stability. Striking the right balance between regulation and innovation will be crucial to ensure that CBDCs can support economic growth without compromising individual freedoms or destabilizing the global economy. The future of CBDCs is uncertain, with both supporters and critics presenting valid arguments. As more countries explore and adopt digital currencies, the impact of CBDCs on the global economy will become clearer. The decisions made by central banks today will shape the financial landscape of tomorrow, making it essential for policymakers to weigh the potential benefits and risks carefully. Ultimately, the success of CBDCs will depend on how well they are integrated into existing financial systems and the extent to which they address the diverse needs and concerns of individuals, businesses, and governments around the world. To learn more about CBDCs and how to hedge against the uncertainty of an uncertain future, join us at The Bullseye Offensive for more investment insight, analysis, and deep research for the bullish investor.